Okay, hi everyone. Thanks for coming along tonight. We're here to introduce you to the world of mortgage advice tonight, and I run the advisors of Mortgage Lab. My name's Rupert Goff, and I'm the owner of Mortgage Lab too. Some of you might already be in the industry, and some of you may be completely new. What I'd like to do tonight is what I'd like is everyone to come away with an idea of how you grow your mortgage advice business, how you get paid in the mortgage advice industry, how much you get paid, and of course, how can the Mortgage Lab help you. I'd encourage you to shop around after you've listened to this webinar tonight. Shop around and find out how other mortgage brokerages run their companies. It's good to know what's in the market. And I'm very proud of the model that I run, and I think it's one of the best, one of the fairest in the industries. It rewards hard work by giving you a valued asset and encourages participation between the Mortgage Lab advisors. So tonight, really just going to take 30 or 40 minutes going through the information, after which I'll get in touch with you and we'll see if you have any specific questions. There is a replay after this. You'll get an email a couple of hours after the webinar is finished, and that will give you the replay. It's just on YouTube, and you can watch this as much as you like up for 10 days. Feel free to share it around if you've got friends who may be interested in the industry as well. It's free for people to look at. Okay, so the first thing to know is, so in about 2 hours, you'll get this. It'll be recorded and free for you to look at. Okay, so what is a mortgage advisor? So a mortgage advisor has an overview of all of the banks, so that when our clients want to buy a property or review their mortgage, they can make an informed decision about which mortgage is best for them. These days, each bank has its niche. Some cater strongly to self-employed business owners. Some really like to deal with mum and dad buyers. Some banks have funds to lend to buyers with small deposits, and this funding ability can change from day to day. So we take the clients to the best bank for them, and the banks pay us for it. Why? Because we're replacing a staff member that was sitting in their branch, taking up expensive ground floor premises, etc. And as the clients approach the time to purchase, we sit down with them and work out the best mortgage structure for them. So it might save them money on their mortgage, or it might be structured to allow them to buy a business or have a baby in the future. But this sort of leads us to the next question, is why you'd want to become a mortgage advisor. In my opinion, it's being a mortgage advisor is the best business in the world. You literally turn up to people's homes, take a weight off their shoulders, save them buckets of money, and then a bank pays you for the privilege. If you've been in business before, you'll know what a pain late payers are. Not just a pain, but a danger to your business. Cash flow is the leading cause of businesses closing down in that first critical sort of 3-year period. And with mortgage advice, there are no late players to chase like other businesses. None of these 90-day overdue invoices. The banks have cash, and they pay us immediately as soon as the mortgage settles. So mix that in with the fact that you're self-employed, which means if you work hard and you bring in lots of business, you're rewarded for by being paid more. And the business itself is a low-cost business to run. The main expenses are literally coffee and parking and a cell phone. And the low startup costs, the basic startup cost is $1,500, which is a course that gets you all the basic information for becoming a mortgage advisor. So given that it's so easy to get into, who are we looking for? You're going to be self-employed, so you have to be a self-starter. The more you work, the more you get paid. We have goals that we set, of course, or KPIs, some sometimes call it, which help you on your journey. But we don't call you to make sure you're out of bed. You have to be ready to go every morning. That comes with need and enthusiasm, especially for the property market. Being a mortgage advisor means your finger is constantly on the pulse of the economy. You can see the tide turning by what kind of clients you're getting in, often before the statistics show it. And it's an exciting place to be if you enjoy the property market. That will rub off on your clients as well, and they will enjoy the process too. So enthusiasm is a big thing, and enthusiasm, of course, can come in other means. It might mean getting a kick out of helping people into their first home, or watching them grow their investment property portfolio. It's different for different people, but you'll know whether you're excited to become part of the industry or you're ho-hum about the whole idea. Now, one of the first filters we use when we're talking to new advisors is EQ, sort of emotional intelligence. You must be good at reading people, seeing when they're nervous, able to put people at ease. Getting a mortgage is stressful. These people are often signing up for 6 or 7 times their gross salary. So it's your job as a mortgage advisor to calm that person and walk them through the process. If you do that, you'll have a whole client book who think you're amazing, and then tell all your friends you're amazing as well. Fourthly, you must be able to commit to doing this full time. It is a fun business with lots of benefits, but it's also very deadline driven. So if a client comes to you and says they're going to auction tomorrow, say, you can't tell them that it's not possible to get that house signed off because it's not a day that you work on mortgages. The deadlines are tight, and for your customers, the stress is high, so you have got to be on call. Additionally, just in line with that working full time, the first 3 months are also hard while you grow your business. The key is to get your name out there as a professional mortgage advisor, and we'll talk about that more. But the more people that you're in front of, the quicker your business will grow. So this means at least 40 hours per week working on your business, and I would suggest 60 hours in the first few months. Keep that in your mind until you realize that it sounds a lot until you realize that you'll be having most of those at having coffees and beers with people. But stick 60 hours a week in the back of your mind because those first 3 months are critical to growing your business. And this leads us to our next requirement. You have to be good at networking. The more time you put into networking, the more business you'll get. End of story. You don't have to be sleazy about networking. It can be as simple as catching up for a beer with friends, going for a coffee with a complementary business like an accountant or a real estate agent. But any time spent in front of someone else is a reminder that you're there and that you're the go-to person for mortgages and can help them and their friends. And finally, and pretty obviously, you'll need to be able to drive. You'll need to have full residency and a clean credit report. And if you're not sure about your credit report, if you think there might be a blip on it, I'd suggest going to mycreditfile.co.nz and just checking out what your credit file looks like. So our business is to get the best arrangement for our clients, and so it's important that we have the broadest range of options for them. So we work with the broadest range of banks and non-bank lenders possible. This includes obviously the main banks, ASB, ANZ, BNZ, Westpac, who provide the standard mainstream mortgages. These providers typically give great rates and do the majority of the loans throughout the country. You'll notice two advertised banks are missing from this list. HSBC is very particular about who they take on as clients and don't currently have an advisor relationship. Kiwi Bank also currently only works with a handful of advisors. If you have a client who that's hell-bent on going to a New Zealand-owned bank, which does happen, we work with a range of other small banks, such as you'll see TSB there, or SBS, or Cooperative. They're all high-quality, high-service banks that meet the needs of people looking for New Zealand-owned banks. They all pay commission, and we'll talk about commission soon. But the same as the mainstream banks, and they definitely have a place in a mortgage advisor's portfolio of suppliers. And then we have some non-bank lenders like Resimac and Liberty. These lenders are typically for clients with a slightly unusual application. They might be borrowing 80% on an investment property, or have a bad credit report that means the bank isn't able to accept them. And then finally, we've got the finance companies that provide a higher rate of interest, but have a slightly easier criteria to meet. So one option that we're exploring at the Mortgage Lab is having a non-bank or finance company lending specialist in-house. So if you want to be an advisor and you want to really focus on a niche, we're looking for someone who really focuses on non-bank lending as well. You'd be an advisor the same as everyone else, but would specialize in the particularly difficult applications. And now the question that everyone who's watching is no doubt wondering, how do mortgages advisors get paid? So when a mortgage, went too far. When a mortgage is drawn down, in other words, when a person settles on a house, an upfront commission is paid. And so this is a lump sum of money that arrives about 3 days after the mortgage is settled. It can range between about 0.45% and 0.8%. So for examples, we've got here, if you arrange a $1 million mortgage, that would be a gross commission of $4,500 to $8,000. And obviously a $500,000 mortgage will be half of that, so $2,250 or up to $4,000 in gross commission. Now, obviously, that's quite a range. The question has to be asked, why would you send a mortgage to a bank that's going to only pay you 0.45% when you could send them all to 0.8% and get a lot more worry, get a lot more money? There's three reasons. That 0.45% bank might be what's best for the client. That might be the best one that suits your client's needs. It might be the only bank that accepts the application. And the other thing is typically the banks that pay less upfront commission pay what is known as trail commission. So trail commission is an ongoing payment that's continually paid to you while the mortgage is in place. So if the mortgage is in place for 30 years with that bank, you should receive commission payments for that amount of time. Now, it's based on how much they owe each month. So obviously, this will reduce over the 30 years, but the most important thing is it's essentially passive income. You're paid 0.2% of their mortgage amount to look after the client. So before we get too bogged down with this too much, let's look at some examples of a standard mortgage, and we'll figure out how much those upfront and trail commissions come to. But for now, the takeaway I want you to take away at the moment is that there are two types of payments: the immediate upfront payment and those ongoing passive income trail payments. So let's look at an example here. Here's a property that has been bought, and the mortgage is $500,000 of lending. So this will be a fairly standard mortgage for most people in the Wellington, Tauranga, Christchurch area. Might be a little higher than, say, the Hawke's Bay area, and obviously a lot cheaper than a house in Auckland, but sort of gives you an idea. So if the client ended up with ANZ, the total upfront commission is $4,250 because ANZ pays 0.85%. They're the highest upfront, but they don't pay any trail. So $4,250 from ANZ. Now, ASB doesn't pay trail either, but it's got an upfront commission of 0.65%. It's worth remembering at this point, I just want to point out that there are no extra costs for your client. So even though you get $3,000-4,000, it's not like they have that $3,000 or $4,000 charged to them. They wouldn't, it's not an additional fee that they wouldn't have paid in the branch. The money that the bank pays us is instead of what would have been paid to a branch member, It means they can have less permanent staff, less training costs, even less branches as a result of using mortgage advisors. So don't worry that your clients are going to be worse off than if they'd gone to the branch. It's exactly the same and usually a better. So that same mortgage is paid at 0.45% in BNZ and Westpac. Although Westpac has quarterly bonuses, which means you can sometimes get about another 0.15 on top. But this mortgage will also start to earn $83 per month after 12 months. So on the 13th month, you'll start to see that trail commission come in. And most importantly, this trail will continue as long as you continue to look after the client every time they have to have a refix. So every year or every 2 years, you'll contact the client and organize the refix, and that trail will continue to come in. And you can see how the amount will build up. So there's going to be more and more mortgages, and that passive income will build up. There's one extra treat that Westpac and BNZ give you. Let's say a friend of yours has a $500,000 mortgage already with BNZ, and they don't want the hassle of moving. They quite like their bank, but they do have an account coming up for maturity. So they want to talk to you about refixing their mortgage, but they don't want to move banks. As long as that client has been with BNZ or Westpac for at least 2 years, when you refix their mortgage, you will get the entire trail paid effective immediately. So the following month, you'll start to receive $83 per month ongoing, and you haven't changed the bank on them. You've just simply sat down with them for half an hour to an hour and helped them with their current mortgage, and you're immediately paid for that. Those of you who love the idea of passive income should immediately be making a list of all your friends who have mortgages with BNZ or Westpac. And if you don't know where their mortgage is, then we have a good script that you can use to ask people without insulting them or offending them, where their mortgage is, and it revolves around telling them about your new mortgage advice business, and you just want to help them out. So we can work on that later. So now you know how much income to expect. The next most obvious question is, how do you find clients? Well, we've already touched on networking a little bit, and there are a whole range of options available for a relentless networker. Most of the groups involve getting together weekly or fortnightly, and usually limit attendance to one per person. So BNI, Bob, Venus, and TNG will all limit it so that if you are in the group, and then there will be no other mortgage advisors in that group. It's a great way to establish trust with a group, and there are people from networking groups that I've belonged to 5 years ago in Wellington, and I still keep in touch with them. I still have coffees with them whenever I'm in Wellington. So the friendships can be long-lasting as well as business. The next thing we have, and I'll share a file with you if our new system is going to let me. Let me see if I can do this. Share file. You should have that available now. The Project 100 PDF. The goal of this document is to write down 100 people that you know who will support you in your business. They don't have to be about to buy or currently own. They might just be a good friend who will tell other people about what you're doing. The list of 100 people essentially amounts to who you'll have coffee with in the first 3 months of your business. You'll tell them about the new business you've started, and see if they know anyone who might be of assistance. And in your group of 100, there will be 5 or 6 people who become super referrers. They might work in a complementary business, again, like an accounting firm or a real estate agency. Or they might simply just be those good friends who tell everyone they know and try their best to support your business. So you might want to make a note of those in your Project 100 and pay special attention to them. Again, you're not trying to be sleazy with the networking. You're just trying to touch base with the small amount of people that will really, really help your business. They'll grow it significantly and faster than any other form of marketing. Social media and newsletters are a great method of getting your name out there if done correctly. And at the Mortgage Lab, we run the facilities for our advisors. We provide the articles to push out on social media and design the newsletters, which are pushed out approximately every 2 months. We then collect all the data about who's clicked on links and give that the information to the advisors. It's all part of the expert positioning, which is the next line down there. In other words, when people think out there, think of mortgages, who do they think of? Well, if they're in your network and they're getting subtle and not overwhelming reminders of what you do, they should think of you first. So you're the one they think of, basically. You can try cold calling. It's not for everyone, but it is an effective way to quickly build a database, especially if you don't have a network established already. And but it takes a good script and a lot of patience. And we also run seminars and webinars, much like this one, to teach prospective clients how to purchase their first home or how to pay down their mortgage. We have one next week. If you want to see how they're run, you can have a look on our Mortgage Lab page under events, and you'll see the webinar there. And lastly, our joint venture scheme is unique to New Zealand. And it's a company structure that we have spent tens of thousands of dollars creating. Basically, we search out complementary businesses, and at the moment we're focusing on insurance brokerage companies, and place one of our mortgage advisors specifically in their office. Now, the benefit of this is that you have a good bunch of professionals to refer your insurance needs to, because all of your new clients are going to need life and health insurance reviewed, and you are sitting in their office, so they have a professional on hand to talk to about mortgages for their clients. So there's a great two-way street of trusted referrals. So what should you be expecting to earn? It's always a difficult question. If you work hard and are good at asking the right questions, the answer is a lot. But it depends on your networks. Do you have a large family who will help you? Do you know any real estate agents or accountants who would support your new venture? So here is a breakdown of the previous mortgage example. So $500,000. We're just using the middle ground of 0.6%. Remember, the range was 0.45% to 0.8%. And so the split is 30% to Mortgage Lab and 70% to the advisors, you the advisors. So you'll receive 70% of 3,000, which is 2,100. Now, initially, we set the goal of sending 4 applications to the bank per month, and we'd expect 3 of those to be successful, which means 6,300 per month or 75,000-ish over the year. Now, this shouldn't be an exciting number for you. It's not meant to be. We've seen a lot of other companies in the industry promise the world with unrealistic income expectations, but there is one thing you should recognize. Don't forget about the trail. So let's say you've sent 3 mortgages per month at $500,000 each. And so over the year, you've sent $18 million of mortgages. And this is quite a realistic number. So let's assume you've put half of those mortgages to Trail Income Bank. So that's BNZ, Westpac, and Sovereign. So you've sent $9 million there. What that means is the following year, you've got a total passive income, a gross commission income of 18,000, of which you'll get about 70%. You'll get 70% of that. So every month, there should be roughly $1,000 coming into your bank to pay for any expenses you've got. That pays for the car or cell phone, and you can go on about your business earning that upfront commission. I really want to press home that the first year is difficult. The more work you do, the more you network and get your name out there, the faster you'll earn. But in general, the first 3 months are about building networks, and you start earning by the 4th month, which means you should expect in that first year about 60,000 in the first year. Again, this is the bottom line. If you have a large network or you have friends who are real estate agents, there's absolutely no reason why you can't be well over the $100,000 mark in the first year. That brings us to the second year, which is when things start to get much more interesting. So you know the industry and you know your systems, you know our systems inside out. You're known in the industry as a mortgage advisor. If any one of your friends or acquaintances even hears the word mortgage, they think of you. So we raise your goal to 8 applications per month. And at this point, you should be expecting about $150,000 of upfront commissions, and that's before trail is paid. So your trail income, second year, by end of the second year, should continue to grow and should be about $25,000 to $30,000 of passive income in your hands. That's after the split. And from there, the sky really is the limit. Our systems allow you to write 20 to 25 applications per month, and if you're doing that, you'll be well up into the $400,000 mark. My personal best is 27, and it's a busy time, but it's very lucrative. So to get through that first year, we've also come up with a few additional sources of income that you can earn commission on. We'll set you up and train you to work with clients on their KiwiSaver. And while the upfront commission isn't especially high on this, it does have a trail income component. So which means as your clients' KiwiSavers grow, your trail commission grows. It's only about $40 to $200 on the upfront commission, but that trail grows and grows. It's a really good way to introduce yourself to clients as well, because you're talking about KiwiSaver and you're talking about mortgages at the same time. If you refer to one of our preferred life and health insurance brokerages, they will pay you 20% of the commission that they receive. And of course, it depends on the amount of insurance that's taken, but this can be around $1,000 of a referral payment. Obviously, every person who is buying a house needs to protect their home with insurance. And so referring to our trusted partner, Fire and General Partners, gives you a 4% commission. Now, that's not a heck of a lot either, but because home and contents insurance is renewed every year, you'll get this commission paid every year. And so that can be viewed as a sort of a trail payment. Every year you'll get that renewal. And finally, if your clients require an easy to set up sort of online trust to protect their own home, we have a referral arrangement with a online trust company. So a successful referral to them would get you $650 of gross commission. So now you know the most important aspects of the mortgage industry. I'd like to tell you about why I think the Mortgage Lab is the best choice for you. Firstly, we have a fair commission split of 30-70. So we're not trying to take all your money. The idea is that we take 30% and we take all of the admin and compliance problems off your hands. This means you can spend 100% of your time going out and finding new clients. So with that 30%, we pay for the following things. We pay for professional indemnity cover, mortgage aggregation costs, FSPR, financial service providers registration, dispute resolution scheme, CRM, additional service, one conference a year, which is actually in about 2 weeks' time, and we look after all the health and safety compliance as well. We've also got training mornings every 3 weeks, which are run, plus the additional training that we get from our aggregator. Now, if you're not sure what some of those are, don't worry, that's exactly the point. You don't need to. We'll sort it all out for you. Your one job is to go out and meet more people who can help. So we can cover all these costs for you, and then we implement all the compliance. So we can make sure everything's up to date with the financial service providers database and dispute resolution. And we analyze market risks and check all our computer systems are as protected as they can be. And this includes business continuation strategies. So if something happens to our network, we have several backup systems that mean your business is up and running immediately. We also run all the health and safety protocols. I've got a meeting on Thursday. It's a full day to look at the health and safety compliance. We take care of that for you. We distribute the commissions and we liaise with the banks. Now, I know it's not a very interesting list of things to look at, but again, that is the point. We take care of all the boring compliance. You give it to us and you can go out and meet clients. And thirdly, we do all the marketing. Now, we've already touched on this a little earlier. We work with you on your social media broadcasting. That's LinkedIn, Facebook, Twitter, Google+, Neighbourly. We analyze which is the best time of the day to be pushing out articles. It's different on LinkedIn versus Facebook. Facebook tends to be in the morning, LinkedIn's more in the evening. We'll write blogs. that have specifically focused keywords, and we interview guest speakers for the blogs, and then we'll push these blogs out in newsletters to your clients. Again, this is at a specific time of the day, so we get the maximum impact. And we'll run seminars and webinars as a way to gather new clients for you. Now, when you're working with a Mortgage Lab, you're working with all our advisors. So we have weekly staff meetings to chat over hurdles that advisors have struck. They're not long meetings. They're usually about half an hour, but they're packed full of lessons that other advisors have learnt that week. So all our advisors are encouraged to share and help one another. We also have a WhatsApp forum that advisors can post to with the latest news in the industry. So if you hear a bank has just changed a policy, you can broadcast it out to all the Mortgage Lab advisors. And on more than one occasion, that has meant an advisor thought they were going to lose a deal, but this new information has meant that they suddenly give their client a new chance to get that deal across the line. So obviously we have a weekly one-to-one meeting to talk about your specific hurdles and make sure everything's running smoothly. So we've got weekly mentoring meetings. This is the time to brainstorm ideas of where to grow your specific business and maybe ask questions that weren't covered in the staff meeting. And finally, we run a fully loaded intranet with all the latest information, market information, forms, training videos, systems. I've lost my place on my page, and what the banks are offering. So you can see on that screenshot the first month basics. So these are just some training videos for your first month in business, just about some tips to grow your business faster. And then lastly, we have the joint venture model, which we've spoken about before. We are trialing this in 2 offices in Auckland, and it's going very, very well. We're happy with the results. Because you're the go-to mortgage advisor in that company, you receive a significant amount of leads that would not have been passed on if you weren't there. So if you're still listening at this stage, the last thing you need to know is that what you need to start. Technically, you need a laptop, a cell phone, and a car. But you need to love to meet people. It doesn't necessarily mean you're an extrovert. It just means you like to, you enjoy going out of the office and meeting up with people and helping them. Because mortgages aren't a sales environment, they're more of a therapy environment, I guess. You don't have to be an extrovert. You don't have to be on the far extrovert line. You can sit in the middle there somewhere. You'll also need to have 6 months of savings and of course that enthusiasm we talked about at the beginning. So the reason we say 6 months of savings is because you can't be talking to clients and have a desperate look in your eye, and you'll know the one I mean. You may have seen it in other salespeople, that look that says, please buy this or I won't eat this week. Now, you should be recommending a mortgage for a client because it's the best for their client, not because you need a maximum commission. So even though you won't need it, we strongly suggest you have a stash of savings to live off. And if you don't have savings, don't panic. We've got an option for you. So it is possible to write mortgages before you start. So let's say your brother and his wife wants to buy a house next month, but you're not quite ready to become a mortgage advisor yet. In this instance, I can meet your brother and wife and process their mortgage on your behalf. So I'll do it. We'll then store your 70%. So we'll pay you as though you did it, the 70%, and we'll store it for when you start the Mortgage Lab. So as long as you start within 6 months, you'll get the commission when you begin. And if you get 3 or 4 of these under your belt, you should have enough to start the business with a comfortable buffer there. So the reason we ask for 6 months is that you start within 6 months, is that we can't store this money indefinitely. So there has to be a time limit on it. If it's not exactly 6 months, it's 7 or 8, we'll obviously just keep in touch and we'll work on that. It's not the end of the world, but it can't be years and years down the track. Okay, so almost there. So what's next? Well, we'll ask that you complete the Project 100. And if you haven't got a copy of that, if you didn't manage to download a copy of it, then just flick me an email. My email is just on the screen there. See if you can get at least 6 center of influences, which remember is the super referrers that would always refer a ton of leads to you. Try and get at least 300 connections on LinkedIn. The more people you have in your network, the more will receive a notification when you make the move to the Mortgage Lab. So make sure you've got all of those past workmates, all those neighbors, the old school friends. They might be parents whose children go to school with your children. You'll be surprised how many people you know who you've worked with over the years. And LinkedIn's a pretty unobtrusive way of connecting with people. You're not spamming them with games about candy. You are just giving useful information and just keeping the ability to keep in touch no matter where they move. On the flip side, Facebook, if you want to get 3 connections on there, you're not going to be spamming them with on Facebook. But if you like articles about mortgages, so you might see an article on Stuff or New Zealand Herald, you like it, other people in your network will see that you like it and be reminded that you're in the mortgage game now. So the more people you're connected with, the better. It's just a gentle reminder that you're in the industry. And if you like what you've heard tonight, contact me for a further discussion. We're looking for advisors all over the country, so don't let geography limit your options. It doesn't matter if you're in the Hawke's Bay or Tauranga, Wellington, Auckland, Christchurch. We're looking for advisors. We meet over Skype. Actually, we've just changed to Zoom, and we'll meet weekly and join into our staff meetings via those conference type calls. And finally, thanks for tuning in. I love the mortgage advice industry. I've been in it for 7 years now, and I think you will too. So thanks for coming along tonight, and make sure you get in touch. Cheers.